Happy Valentine's Day, and there is no better occasion than to talk about the love trade today. Joining me now is Frank Holmes, CEO of U.S. Global Investors. Frank, good to see you again.
Great to see you, and mwah, to everyone out there.
I feel the love, Frank, and I think since I've known you, which is close to 10 years now, the first interview we ever did 10 years ago, you taught me about the love trade and how it relates to gold, and it's still relevant today. So for those of viewers who may not have heard about it yet, tell us what it is and why gold investors should follow the love trade.
Well, there's two drivers to the price of gold. The fear trade, which dominates the psychic of North Americans, and the love trade, which is China, India, affectionately known as Chindia, the Middle East. 60% to 70% of all gold demand is based on love. And that is what is the key long-term factor. And what drives the love trade is rising GDP per capita. And what have we seen in the past 18 years is in China and India is a phenomenal 45-degree angle in rising GDP per capita. And just the absorption of gold out of those countries is phenomenal.
And speaking about China and India now, Frank, is the love trade present now? What are we seeing on the jewelry demand end there?
It still remains robust, and sometimes it's getting blurred. A pickup in Hong Kong demand for gold. Is it going for China's government's buying gold, or is it really as another way going in for that love trade? So I'm not aware of it's not as explicit as it used to be. But I think what's important for investors to recognize is we have a company called Monet. Monet allows you to buy 24 karat gold jewelry, and that's what most people do. From the Middle East to India to China, Southeast Asia, they buy 24 karat gold jewelry, and Monet allows you to buy 24 karat gold jewelry at a modest markup. They deliver it like as Amazon comes to your home. So I think that North Americans are going to start appreciating not a 500% markup of the price of gold.
Frank, finally, I know we spoke not too long ago about your outlook for gold prices. You were bullish on the metal. Has anything changed since then? I know we've come down a bit since those strong rally we had at the start of the year.
Yeah, we had a strong rally and it sort of faded off with the Chinese New Year, which historically happens. And I think that it'll resume again. Gold's up today. It has a lot with the dollar. Rates have peaked. The fear that rates will go up short term. But overall, car loans are down. Housing is still struggling. So I don't think that you're going to see long end of the yield curve rise dramatically. And that means that the dollar is going to basically peak. And that bodes well for gold, for the fear trade people.
Frank, does it surprise you that we have the rally come down right after the Chinese New Year? I mean, shouldn't that demand still be robust?
Yes, but historically there's a pickup of people buying gold in China for gift giving during the holidays. And so now they have to go through this sort of thaw, and they go, unless gold goes on sale, which we have for in Boxing Day for buying shoes and socks and things of that nature. There's no Boxing Day for the price of gold, gold jewelry.
Frank, I appreciate your thoughts. I'll see you soon at the BMO Capital Markets Conference in sunnier weather in Florida. So look forward to that. And happy Valentine's Day. Frank, happy Valentine's Day to all our viewers. And we'll be back tomorrow.
Lots of love.